Tell me a little bit about your tactical asset allocation strategy.
So we have a tactical approach to income, and the idea here is that if the average retail investor is oriented, roughly speaking, to half bonds, half stocks, they're taking a certain amount of risk, but not getting much income. So our tactical approach to income and the multi-asset income fund here at BlackRock is for the same level of risk, how much income can you generate? And uh, if you use that as a starting point, you're going to shy away from some of these lower yielding asset classes and focus more on things like high yield bonds and emerging markets debt, high quality, high dividend paying stocks, and some other asset classes that are really complementary and add diversification to a portfolio.
What strategy does that replace, and why is the old rule of thumb 50% equity, 50% fixed income? Why doesn't that work?
I wouldn't go so far as to say that it absolutely doesn't work, but that I think you need to take a very long-term view of the world to say that a 50-50 balanced strategy is the only way to build a portfolio. Certainly hasn't worked well over the last 10 years. So if you take a more tactical approach, you're simply responding to market environment and market conditions. And so if income is a goal, you'd be taking assets out of asset classes that have rallied, where yields have come in, and be looking to redeploy that capital where there are higher, more compelling yields.
BlackRock just launched the multi-asset income fund. Just what's the strategy there and the timing? Can you talk a little bit about that?
Sure, we launched the fund at the end of November. We've seen an amazing amount of demand and interest in the fund so far. But the goal will really be to give the end investor, that investor who might be 60 or 65, who's looking for an income-oriented answer to help them in retirement spend down their assets. And so at the moment, the fund has a yield of right around 5.5%. We think we anticipate that to be sustainable, but that's really subject to market conditions. But the goal here is to really deliver a smoother level of income, a smoother return stream than you might get from a normal 50-50 balanced portfolio.